defining for us the term interest rate? Who can define for us the term interest rate? None of you has taken a loan from a bank? Joyce, you haven't taken any loan from a bank?
Kent.
Yeah?
It's the money
Rebecca?
charged.
Mm-hmm.
Money charged to the borrower based on the amount of money borrowed.
Yeah, that's a cost for borrowing money. So, and borrowing money can take two perspectives. You can either borrow from a bank or you can borrow from the public. So, when you borrow from the public, we refer to that as the debenture. If you borrow from a bank, you refer to it as a bank loan. So, whichever way, you will be charged an interest. That's a fee that you'll be charged for borrowing or accessing or holding that particular money. We move on to flexible budget. Flexible budget. Who will define for us flexible budget? Nancy. Nancy, you have not talked to us. Nancy, talk to us. Define for us a flexible budget. Nancy. If Nancy is not there, Rebecca. Francisca.
Um,
Yes.
the flexible budget, from the word flexible, it's the budget that adjusts according to activity.
Yeah. So those are budgets that are not fixed. That means if at all the activity we had budgeted to spend, let's say 10,000, and we realize we required 15,000, then the flexible budget will allow us to increase that expenditure to 15,000. Likewise, you had planned to spend 15,000, and we realize we only require 7,000. Then within the budget, it will allow us to only to spend that particular 7,000. You don't have to exhaust. Unlike fixed budget where you have to exhaust all money available or all money allocated for it. Or if you have an extra, you in that case you can only postpone. You don't have a room for negotiation. Mhm. Time value for money. Time value of money. We discussed that when we were discussing NPV and IRR. We discussed that when we were discussing NPV, IRR, and profitability index. Who can tell us what it is?
I think we can say that it's the aspect that money changes with value. That the value of money today is not the same value of money tomorrow. The
Mm.
exact value of money tomorrow.
Yeah.
Something like that.
Yes. It's the aspect where money change value with the passage of time. Yeah, the way you have said the value of money today. For instance, if you have 10 shillings today, it may not be same as 10 shillings tomorrow. The loaf of bread. But now tomorrow the price of bread will be 55. The price of milk will be 55. So that means if you go with 100, you can only choose either to have milk or to have bread, but you cannot have both. Or you also choose to add more money so that you can have both. So that's what you refer as time value of money. The next question is asking us to describe 6 factors which influence the price charged by a supplier. This is within your domain now. This is within your domain. What are the factors that influence the price charged by a supplier? Hmm. We start with the Francisca, then Joyce, then Nancy, then Rebecca. Hmm?
We can say the quantity of the goods, the volume of the quantity.
Yes. Quantity, we remember we're talking about price. No, we are talking about volume. That if we are buying more units, we are likely to get a discount. So the price is likely to be low. So thank you. Volume. Another parameter that can also determine. We are moving to Joyce, then Rebecca, then Nancy. Anyone who is ready? If for Joyce is not, does not have a point. Rebecca, you can take over.
Uh, there's also time. Let's,
Rebecca,
for
I can't hear
example,
you.
I'm saying time. Time also influence the price of a commodity. Can you hear me?
Yeah, time. Yeah. Yes, the season. I can hear you appropriately. Yes, yes, we can refer to it as a season. Season will determine the price that supplier will charge. For example, if you request for items which are on season or which are being produced in bulk, then the price will be low. If you request items which are off season, that means which are being requested or are produced in low quantity. In that case, it will determine the price that will be
Weka
charged.
password.
Thank you. Mhm. Yes, you want to add, Rebecca?
You another point?
Go ahead again.
Transport efficiency in terms of transport. Am I audible?
Yes, you are.
Hello. Okay.
Yeah, I believe there's a problem in network on your side. Yeah, you are cutting, so you are not able to get to your point. fully. Come-
What of location?
Yes, Rebecca, we haven't gotten your point,
It was
but
about
Francisca also on.
transport.
Francisca, you can give us yours as Rebecca tried to sort out her machine, probably.
Rebecca said transport, yeah?
transportation cost that is required. So if you list, for example, commodities that require specialized transportation, then it will also determine the price the supplier will charge you. Yes, Francisca?
The demand for the
Francisca,
product.
you're saying something?
Demand. My point is demand. The demand for the product.
Yes, allow me refresh my machine on my side because I'm not able.
Yes, I think it's your side.
Hello, can you hear me now? Confirm.
Yes.
Confirm if you can hear me now. Oh, I had lost some points. Rebecca had a point. Joyce had a point. Francisca also had a point. So we can go back. So who is giving us the first point?
I was asking what about the location?
Joyce, nasikia background. So I've activated both the Wi-Fi and the bundles.
My point was demand.
Demand, yes, very well. Demand will also determine if there's high demand for commodity, that means there will also be a high cost. If there's low demand, then the price will be low. Then another, Joyce has given us location. Yes, location will also determine. That means location. It also, for example, if we are within Nairobi, a commodity is sold at Westlands or Upper Hill. Do you think it will have the same price as if we were to sell a similar commodity on River Road? Can we get at same price? No, it wouldn't because of the location. So location can also determine if you get suppliers from River Road, they'll charge you moderately lower cost. But if you get suppliers from Upper Hill or Westlands, then they'll charge you some considerably higher price. You have some more points, or you can move to the next question.
How about availability of the commodity? Or that is the same as the demand?
No, that will be supply. And we had discussed about availability when we talked about seasons. And I gave an
Okay.
example that we can buy goods which are off season. Or when you talk of goods that are off season, that means they are not being produced at that particular moment. For instance, if we are producing maize is harvested either once a year or twice a year, depending on the area. So now, if you go to buy maize when they are being harvested, we refer to that as you are buying maize on season because it's on season. So there are so many people who have produced maize, so there are chances you can get at a lower price. But if you go to buy maize off season, that means after several months after harvest, then it means no, not so many people will be holding on maize, so they are likely to charge you higher costs. Yeah. Is there another point, or you can move to the next question?
We can move on.
Okay. The next question is asking to distinguish between revenue expenditure and capital expenditure. Who can give us the difference between the two? Revenue expenditure and capital expenditure. Uh-huh. Who is willing to give us the first difference between capital expenditure and revenue expenditure?
I can try.
Yes, go ahead.
I think capital expenditure are used to acquire the assets of an organization, like, for example, the long-term assets,
Yeah.
like to acquire and maintain this.
Mm.
And then
Mm.
revenue expenditure comes from operations of the organization.
Yeah. Very well, as you have Francisca has defined. Now, when you're talking about revenue expenditure, those are the normal day-to-day operation of expenditure that we incur to finance operation of day-to-day activities, like when you pay staff salaries, when you pay office rent, when we are buying goods. Generally, when you are buying goods that we expect it will assist us generate some revenue, some income. So we refer to that as a revenue expenditure. But now, when you are investing in long-term investments, then that we refer to it as a capital expenditure, like purchase of land and building, purchase of machines, repair of machines. That's considered as a capital expenditure. So we have handled question 1. We can move on to question 2, unless if there's any question pertaining question 1. If there's none, we can move on to question 2. So section B, M-Payment has emerged as one of the platforms where goods are bought and sold, bypassing the traditional market setup. Then explain 3 issues that need to be considered in the development of legal framework to overcome challenges of M-Payment. Now, this question is asking us to come up with a solution to some problems. So probably we can start by identifying some of the problems that are associated with M-Payment. Then now we can go back to the question and respond as it requires. Are there challenges you can identify that are associated with M-Payment? Any challenge you have identified that are associated with the M-Payment?
What is the M payment first?
Mobile payment. M-Pesa, mobile money, yeah, Equitel, those are the M-Payment.
One issue is
Yeah,
there's limitation
yeah.
in terms
Mm-hmm.
of the amount that you can transact in a day.
Yes, there's limitation on amount you can transact. Another limitation that's there.
Transaction costs are high.
Transaction costs, yes. Another limitation of using M-payment.
Inadequate cash at times.
Yes, inadequate cash. Another.
Possibility of sending money to a wrong
Yes, wrong transaction.
recipient.
Yeah, wrong transaction. Yes. Another. Another. Have you seen somebody make payment and immediately has received the service he requests for reversal?
Yes.
Yeah. So that means you have offered the service, but you offered service, you have been paid, but he requests for reversal, so you lose out the money again once more. Yeah. So now we have identified some of the challenges. Now, can we come up with the legal solutions that can be done, or something that can be implemented in law so that we solve these particular problems? One, about transaction limits. Okay, limit on amount you can transact. What can we make in law so that we solve that particular problem?
Okay, can I try?
Yes, try.
Maybe increasing the amount, like no restrictions in terms of amount that one spends, as long as the money is available.
Yeah. What if you have lost your phone and somebody transact as much as he can? Wouldn't you complain?
That's a problem still.
Yeah, it will create another problem. If we don't have a limit, it will create another problem. Someone else who would like to try how we can come up with a law that can reduce the limitation of transaction limit? What can we do? Now, I would suggest we can come up with the extra verification for transaction above a certain limit. So you require extra verification. For instance, if you log into your Gmail account on a new machine, what usually happen? If you try to log in on a Gmail account on a new machine, a machine that you have never used.
They
Yeah?
ask for verification.
Yes. You are sent either you verify through another email or you verify through your phone if you are the one trying to log in. So that's extra verification that can be asked. So in that case, if you wanted to transact, let's say you want to transact for extra amount more than the set limit, then they'll ask you for verification so that they confirm if it's you who is transacting or it's someone else who is trying to transact with your phone. So in that case, if you have such laws, you will have solved that problem. So let's move on to the second problem. How can we, which law can we make to control on the transaction cost? Transaction cost. And don't shy away, you can even mention some of the solutions that's already on the market. Some of the problem you have identified, there are some solutions that are already there. So don't shy away, you can still mention the solution that's there. So what can we do to solve that?
Charging.
Yeah,
Charging a considerable amount.
I didn't get you.
Charging a considerable amount.
Oh, you are too low. I didn't get your point. I just got charges.
What about reversing of the money?
Okay, we are not yet at the reversal. We are still at transaction costs. What can we provide solution for transaction costs?
Charging a
Yes.
considerable amount
Yeah,
per transaction.
the transaction, yes. But now, because the question asked us to come up with the legal, what can be made in law to treat that, we can talk of coming up with a law that controls the transaction charges. The same way government came up with the laws to control how much interest the banks will charge customers because their cost was also too high. So in that case, if government can still come up with a law that will control transaction charges, in that case, we will have solved that particular problem. We move on to inadequate cash or inadequate float. What can be made by law to solve that?
How is it a problem, first of all?
Yeah? As a member identified that as a problem, you want to make some payment and you don't have sufficient funds in your account. So in that case, you are not able to make that particular payment. So it becomes a problem if you want to. For instance, if you have made an order of a commodity, so you want to make payment, and then you realize you don't have sufficient funds. So
Fuliza.
which eh?
Fuliza.
Now legally, because the question is we identify legal framework. So how can we make in law? Can we make it
Okay, I think
legal?
it's.
Yeah.
I think it's already recognized by law, Fuliza, as a means of
Yeah.
mobile transaction topping up amount if you are running low on
Mm.
amount.
Yeah. Yes. Then we can also have a law. Probably what I would have suggested, we can have a law requiring that you pay in advance or you initiate transaction in advance. So once you have initiated the transaction, those money are held on a, or you have heard of something called lien, lien, lien.
No.
Mm. So that's there's some transaction when you initiate. Once you have initiated the transaction, for example, you have initiated to buy a commodity and you intended to buy via M-Pesa. So if the law can be made so that that amount that is intended to pay that commodity is held under lien, it cannot be transferred to another purchase. So until the transaction is complete. So in that case, you cannot use that money. Or for instance, if you send money to an M-Pesa and you realize it's a wrong account, when you report to Safaricom, they usually put it under lien. The person who has received money can see that money but cannot use the money. He cannot withdraw. He cannot use to make payment. That's what you are referring to, lien. So the same thing law can be made so that when you are initiating a transaction, probably we can withhold some of the money so that other transactions that come in may not interfere with that amount so that you don't have problem to pay once a commodity has been delivered. Wrong transaction or wrong number, which law can we come up with or which law is already there to assist us control that?
Reverse.
Any member? Yeah, just said you reverse. But remember, we are being asked which law, legal framework, which law can we have so that we control that?
What about
There should
lien?
be.
Yeah,
Lien
Joyce, you
holding.
are holding lien, yes. Rebecca, you also had a point?
I was suggesting if someone gets money from a wrong number, there should be there should be a law that you're supposed to return the money. If you spend it, you still have to pay the money.
Yeah. And there's a law that has been made that if you receive money from a wrong number and you don't reverse or you utilize those money, you will be arrested by anti-corruption, no, not anti-corruption, anti-banking fraud unit. Anti-banking fraud unit, then you'll be imprisoned for a period of 2 years. So regardless of the amount of money that you had received. So now, if we have such laws, it will reduce the element that if I was to send to another number and I've sent it to your number, the chances that you decline to reverse those money. So in that case, such law can assist. Now, the last one on reversal, which law can we make, or which law can we make so that we control reversal?
I think the same can work.
Yeah.
Verification.
Yes, double verification. You can have law that require double verification so that if you have sent me money, let's say, and you didn't intend to send me that money, before it's reversed, even if you make a request for the money to be reversed, before it's reversed, I give an approval for that reversal. So in that case, we can control that. So double verification, you can come up with the law for double verification. Yes, sir. So we move on. Part B. Supply chain is finance related as cash is turned into goods which are sold to generate more cash. Supply chain management is therefore balancing act as savings made in inventory may be used to offset cost of financing other operational activity. Explain 3 costs associated with the inventory. Who can identify 3 costs that are associated with the inventory? Inventory is basically stock.
Carrying cost.
Yeah.
Carrying cost.
Yes, there's carrying cost or holding costs. Holding costs that if we have to move stock from one zone to another, there's costs that we incur. Moving from one place to another, we have to get people who will have to pay. So that's one of the costs. Another cost. Another cost.
Ordering.
Yes, we have ordering cost. Ordering cost, that means when you are requesting for goods, there's transportation that you have to incur. Another one?
What about storage cost?
Yes, storage cost or warehouse. Warehouse, that's also another cost that we do incur. We have to pay for the warehouse. We also have to pay for employees who are working within the warehouse. Another cost that we do incur.
Damage.
The damages, yes. The damages could be under the holding cost, but during, let's say, material handling cost, could be under material handling cost. That especially when you are moving material from one place to another, there are chances some of the material could be spoiled along the way. There could be some breakages that are coming. Another cost. Another cost. If there's none, we have mentioned more than 3, so we can move to the next question. Nancy, read for us the question 2C. Nancy, read for us question 2C.
An I is you. 2C.
Yes, 2C.
An ice making company wanted to buy a machine. Since they did not have the cash, they opted for a debt of 22,000 shillings with an interest of 10%, which was to be amortized by payment of 5,000 at the end of each quarter for as long as necessary. Required. Prepare an amortization schedule showing the distribution of the payment of the interest and the principal.
So, are you able to prepare that? Let me just get, I see if I can expand here and come up with the amortization schedule. So I'm inserting a table so that we make amortization schedule. So on the first part we have period, we'll have amount, not amount, we'll have installment, we'll have principal, or we start off with the interest, principal, then balance. So, yeah.
Is someone trying to join, a student?
Okay, yes, let me check. I can't see. Let him or her refresh and then try to join again. I will let him know.
Okay.
So let's progress as he tried to refresh, and then I'll let him in. So have period 0, we'll have a whole amount which will be 20,000. Yes, they are to borrow 20,000. 22,000. 22,000. So for period 1, they'll pay an installment of 5,000. Now, because they are paying 22, they are paying 10%. What's 10% of 22,000? Hello? What's 10% of 22,000?
2,200.
2,200. So interest will be 2,200. Now, if you have paid 5,000 and from 5,000, 2,200 is going to pay interest, how much money will be available for principal? 5,000 minus 2,200. Hello, you didn't have a calculator today? The person who was logging in is not available still.
I've already told him, Abraham, to try again.
Oh, sir. So once he try to log in, I'll let him in. So 5,000 minus 2,200.
2,800.
2,800. Now, because 2,800 will go to principal, now how much will be our loan balance? If we had 22,000 minus 2,800.
600.
Yeah?
600.
No? 22,000 minus 2,800. It's
19,200.
19,200. So we go to period 3. Period 2. So period 2, again we'll pay 5,000. And because we are paying 10%, now we'll pay 10% of 19,200. So how much will be that amount for interest? How much will be the amount?
1,000.
Yeah,
1,920.
and 20. Yeah. So that would be 1,920. So how much money will go for principal? So you do 5,000 minus 1920.
3,080.
30, 80. Now to get the balance, we'll do 19,200 minus 3080.
16,120.
And 20. So you go to period 3. We'll still pay 5,000. So just a minute. There's a siren. Just a minute it elapses. Okay, sorry. There's a siren. There are some people who are passing the siren, just making noise. So we go to period 3. Period 3, we pay 10% of 16,120. So how much will be our interest?
1,612.
And 12. So now we want to determine the amount that will go for principal. So we do 5,000 minus 1612. 5,000 minus 1612.
Sorry, you said you do what?
5,000 from 5,000, that's the installment you are paying. But now from that particular installment, partly has to go to interest, and the interest will take 1,612. So in that case, from what will go to principal is 5,000 minus 1612.
3,388.
3,388. So now, to get the balance on the loan, we do 16,120 minus 3,388. How much do you get?
12,732.
732. Very well. We move on. I believe Abraham is now in. Abraham, whatever we are doing, we are revising past paper, and we are preparing a loan amortization form or schedule. So on year 4, you will pay interest.
Just earlier.
Yeah.
You will send later the recording, then I'll catch up. Thank you.
Okay. Welcome. Okay. So we are paying now. We are on year 4. We'll pay 10% of 12,732. Hello. Who has the answer?
1,273.2.
0.2. Now we get the amount of money that will go for is principal. So we do 5,000 minus 12,073.2.
3,000.
Yeah.
3,726.28.
Remember, class, supply chain may not that local. Your supply chain could be comprised.
Francisca, you are in 2 classes. You are in 2 classes. Can you get us the figure? Rebecca, you are to give us the figure.
3,700.
3,700.
26.8.
26.8. So now to get the balance at the end of period 4, we do 12,732 minus 3,726.8.
1,000.
Yeah.
1,000.
It can't be 1,000.
9,000.
Sorry. No, it's not.
9,000.
And 5.2.
9,900, 5.2.
5. Yes.
5.2. So we still move on until we get to 0. So period 5, installment still remain 5,000. So our interest will be 10% of 9,005. 10% of 9,005.
It's 900.52.
900.5. Now, to get the principal, the amount that will go for principal, we do 5,000 minus 900.5.
2.
Yeah.
Is 2.
5.2. 5.2. So thank you. Nancy, you are quiet. Probably you have not gone to the kitchen, Nancy. Confirm for us you are still with us.
I'm in.
Yes. 5,000 minus 900 and 900.52. What do you get, Nancy?
4,099.48.
4,000 0 4,099.
4,099.48.
Okay, thank you. So now to get the balance, we do 9,005.2 minus 4,099.48.
4,000.
Where 4,000?
905.72.
900?
and 5.72.
5.72. We move on to the next. That's a period 6. So we still pay installment of 5,000. So interest 10% of 4,905.
90.
Yeah,
490.527.
490.527.
72, sorry.
727.
572.
572. Evo.
Yes.
Okay, so we want to get the amount which will go for principal. So 5,000 minus 490.
4,509.
Yeah,
4,509.
509.
Yeah, 509.428.
Point
428.
428. Now, let's get the balance on the loan. So 490 05.72 minus 450 09.2428. Francisca, Abraham, you, even if you joined later, I believe now you are trying to grasp. Can you get us the answer?
In 292.
209.
396.
Uh-huh.
292. Point 292.
396.292.
292.
Sir, thank you. So we go to the last installment. That's a 7. Now, considering this, on installment 7, Abraham, you can mute. There's a background noise. Okay, thank you. Now, considering the period 7, the amount of money that's remaining on the principal, the balance is not even adequate to 5,000. So we'll fill in the installment amount last. So let's first of all get how much is the interest that they will pay. So 10% of 396.
39.6292.
39.62. Yeah. So now we get to get the principal, that means they will pay the whole amount, 396.292. So that balance will be 0. And then now to get the amount that will be paid as installment, let's add the two figures. Add 39.62 plus 396,292. What's the figure?
435.912.
912. So that's what you expected to prepare. So that's what you are referring as loan amortization schedule. So now, at your later time, you can add up to see how much money this person will have paid as interest. What I've shaded yellow. Abraham, you want to say something? Uh, You can say, or if your gadget, because it has an echo, you can still type on the chat. I'll check. Anyone with a question pertaining that? If none, we can move. So we have handled question 2, 1 and 2. So we go to question 3. Nancy, read for us question 3. 3A.
3A.
Yes.
SACCOs form an important part of capital market for a growing business. Yet many SACCOs in Kenya have a wound up. Members have therefore lost millions of shillings in form of savings. Highlight 8 reasons why SACCOs fail in Kenya.
Can you give us the first one? Who is having the first? Okay. I just before you go up, Rebecca, Nini Abraham had a question about the last interest, which was 39.62, and he's asking why do you round off to the small place? So because Abraham, because we are dealing with the money, when you are dealing with money, we are recommended you to use 2 decimal place. Though if you use 4 decimal place, it's more appropriate because it reduces the error rate. Though because it's money, you can still round off to 2 decimal place. Because if you go beyond 2, those are odd cents. It's not easier or it's not feasible to write a check, for example, of those odd cents. So with the money, you can use 2 decimal places. But if you use 4, it's more desirable because you reduce the error rate. I hope I have responded to you. Confirm. Say Rebecca takes over. So Rebecca, what's the first reason that the SACCOs close? To wound up, that means you are closing. So what are the reasons?
Mismanagement.
Yes, mismanagement. We have seen scenarios where SACCOs are made, but the initiators of the SACCO have their desired interest. So in that case, they don't manage appropriately. Or we have seen scenarios where there are wrangles within the management. Who should make which decision or who supports who. So in that case, it makes the SACCO not to perform effectively. Another reason? Another reason why do SACCO close? Francisca?
Poor leadership.
Yes, poor leadership. That's under mismanagement. Another reason?
Lack of skills and
Yes, lack of
knowledge.
skills. Yeah. Some of the people who have started good SACCOs, some of them are not schooled or are not learned. So in that case, they don't have appropriate skills to run the SACCOs. Another reason?
Poor loan recoveries.
Yes, very well. There's poor loan recoveries. With the SACCOs, we are running them as ujamaa. Kuna urafiki. So in that case, they are so lenient to recover money. Just compare if you were to borrow money from a SACCO and if you are to borrow money from a Shylock. If you default to pay with a Shylock, they'll not listen to you. They'll be very ruthless on you. But now, if you had borrowed from a SACCO, they are very friendly even when it comes to recovery. So that makes it difficult for them to survive. Rebecca, I can see your hand is up.
No.
You have
Maybe
decided to not.
regulatories. There's
Yes,
no enough.
yes, the regulations within the SACCO. Remember, the SACCO cannot increase the interest rates they charge customers because of the laws that are there. So even if the cost of operation is high, the SACCO still has to charge you only 12%, and it has been 12% for a very long period of time. Compare that with the banking, you will find the banks are charging fairly high interest. Compare that to Shylock. Shylock are making more money. They are milking money from us. But now Sacco don't have that opportunity. So in that case, they end up having high operation cost, yet they charge low interest. Another reason. Another reason. Abraham, you can still chat. You can type if you still have challenge with your gadget.
Corruption.
Yes, there's an element of corruption or nepotism or favoritism that sometimes the way the circles are giving loans, you find that if you know somebody within the circle, you are likely to get higher amounts, or you are is likely to skew some of the decision so that you get high amount as compared to other people. Yeah. So in that case, once you've gotten a high amount and you don't have ability to repay, then you default and suffer the loss. Here another reason. Another reason why SACCOs close.
Fraud.
Fraud. Yes.
They
There's a lot of
encounter that.
Yes, there's a lot of fraud that happen in the circle. And this fraud is either perpetuated by external customers or perpetuated by employees. Because circles don't have stringent regulations, they don't have the stringent security measures. So in that case, it gives room for fraud to happen. That an employee would recruit a person, would recruit a customer and coach that particular customer with the intention just save the certain amount of money, come and borrow, and then you don't come to pay. So in that case, it makes it difficult for the circle to continue operating. So because of those fraud. Yes, Abraham has also contributed lack of innovation. So most of the circles they don't have high tech technology. If you visit some of the circle, you'll find they are still their main database. They are using Excel as their main database. When people have moved from Excel, they are using ERP, others are using other softwares. But now you find circles cannot afford to buy those softwares. They can only afford to buy an Excel, to get an Excel which is free of charge. So in that case, it will also give it difficult. It's difficult to trace how much have you paid, especially using an Excel, and it's also prone to manipulation. Somebody can still edit any information in that particular Excel without stress. So, technology challenges has added is also. They have mentioned that most of the circle don't have the advanced technology. So, for instance, most of them even don't have mobile money transaction transfers. They don't have most of those sophisticated mechanisms. Then inequality, either gender or nepotism. Yes, we have discussed that within the circle there's a lot of inequalities, and I've given an example that if I'm a manager in a circle, I'm likely to get my wife or my sister to come and register as a member. Then I'll assist her get some contribution in terms of shares, and then let her borrow. But now I'll be lenient when it comes to recovery of such. Rebecca, yeah, I can see you have a point.
Money laundry, does it affect them too?
Yes, money laundering, and we had discussed that under fraud. There's a lot
Okay.
of fraud, yes. Fraud includes money laundering. So where people come not with the intention to save with the circle, but they only come to clean whatever they had borrowed. For example, if as I work with Kim, if I've stolen from Kim 10 million and I know I'm likely to be traced, so I'll go to the circle, deposit that money, then borrow 30 million. So and do my investment. So in that case, I'm not borrowing for with the goodwill. I'm only trying to clean my money, that money I've stolen from Kim. Another reason why Sacco will close. Yes, Rebecca, can see you still have a point.
Oh, really? Okay. Let me try again. Maybe competition from other kind of savings institutes, maybe like the one that
Yes,
you are saying.
unhealthy. competition amongst the circle themselves. You find like now where you are working, you could have formed a circle. Where you are going to church, you could have also formed another circle, just a circle for the church. You as friends, you could have also formed another circle of friends. So in that case, it's only you who is everybody's looking at you. If you go to your workstation, your workplace, your colleagues are looking to you to register as a member of the circle so that they can see you are working together. If you go to the church members are also looking at you. You are supposed to have registered as a member. So in that case, there's an unhealthy competition amongst the circles, and that makes it to collapse. Another reason, Nancy, I can see you have a point.
Sina.
Oh, imepotea. Francisca.
Sina imeisha haki.
Kazi imeisha, tusonge mbele. At least hizo zingine mtajazia mbele, si ndio?
Yes.
Yeah. So Francisca, tusomee question number 3B.
Two mutually exclusive project proposals with the following cash flow for their lifespan are under consideration for management of XYZ. You can see the cash flows displayed there. Then the firm's cost of capital is 8% per annum. Required for both projects. Question A, part A, the net
Yes.
present value.
Can we do that?
Yes.
Anybody who can get stuck?
Mimi.
Nancy atakwama.
Mi nitakwama.
Kuna table nilituma, uko nayo? Ya yenye tulituma kufanyia net present value, uko nayo? Sasa this how you tackle that. Let me just
Miss
insert a
Ina,
table.
kindly resend it.
Oh, so
Let me check if I have it.
insert a table. So we'll have period. We'll have here cash flow. We'll have PVIF at what percent?
8%.
8%. Then we'll have NPV. So, just a minute. We start off with we do for year one, for project X. I can't copy. It's 420, 380 cash flow. And 420, and then 380. Hmm? 410 and 370. Then 395. So because salvage is 16,000, 160,000 will add 160,000 to 395. So that will give us how much? 395 plus 160.
555,000.
555.
Yes.
555. So initial investment was 1050. So we'll have period. Under period, we said we start with the period 0, and period 0, that's the amount we are investing. So that was 1050, and it's usually negative because we are paying out when you are investing. Then the last column will be total. So we have year 1, year 2, year 3, year 4, year 5, and then the last one is total. Now, for the sake of Nancy, these amounts I've written on this table, I've gotten them as they are from the question. So far we have not done anything outside the question. So I've only picked the year. This is what I'm calling period. Then cash flow, this is the amount of money that is being received for project X. We are started with the project X. So now let me try and see if I can circulate the table afresh. Just a minute.
I've shared.
You have shared, huh? Okay, thank you.
Yes, unless it's not the right one. Okay.
Nancy, you have received, you have seen the table?
Niko nayo.
Uko nayo, sawa. Sasa juu uko nayo na umesema wewe ndio utakwama, ni wewe ndio utatufanyia hii hesabu. Angalia kwa hiyo table yenye imeandikwa PVIF. I know there are two tables, but identify which has indicated PVIF. There's PVIFA and there's PVIF. So identify one that has PVIF. Have you seen?
Yes.
Yes. Now, have you seen on your extreme left, this period? Have you seen that?
Yes.
At the top, you have seen percentages?
Yes.
Yeah. So now for period 0, the PVIF will always be 1. Now we go to period 1. Read for us the figure you are seeing under 8%.
0.9258.
0.9258.
58.
For period 2 is
8573.
0.73. Then for period 3,
7938.
0.7938. Then we move on
7350.
0.50. Then the last one is
6806.
6806. You have your calculator with you, I hope so. Now, to get NPV, we multiply cash flow against PVIF. Now, for example, for year 0, I will give you the answer. It's 1,050,000 times 1, and it's negative. So that means we will still get negative 1,050,000. So I've done for period 0. For period 1, it's 420,000 times 0.9258. The answer? Yes, Rebecca, can't see you have unmuted?
Oh no, I'm just on, sorry.
You get 360,066.
360,066.
Yes.
Okay, we move on to year 2. 380,000 times 0.8573.
325,774.
774. Now we move on to year 3. 410,000 times 0.7938. Nancy, you have not given us a response. Uko na calculator kweli? So tupatie hiyo nini, hiyo period 3. 410,000 times 0.7938.
325,458.
458. Tupatie tena next. 370,000 times 0.7350.
271,950.
950. Haya, mwisho 555,000 times 0.6806.
Hiyo 555 ilitoka wapi?
The question has, okay, year 5 is 395,000, but the salvage value of 160,000. Salvage value, that means like what you can refer as scrap. If assuming this person was to invest in a motor vehicle, so this motor vehicle will serve for 5 years, then at the end of the 5th year ataiuza kama second hand ama kama scrap. So that's what you refer as salvage value. Umeelewa mpaka hapo? So we added 160 plus 395 to get 550.
So it means anywhere there is salvage value, we're supposed to add it.
Yeah, you add on the last year. It's a part of the cash flow that you get from that particular project.
Okay, thank you.
So 555,000 times 0.6806.
377,733.
377,733. And now add those values. Let me just color yellow. Add all these values, starting with the negative 1 million and 50. Starting with the negative 1 million and 50,000, add those other values together. Whoever gets the answer first, you can share. So Abraham amepata 286,929. 286,929. Mwingine amepata the same figure? To confirm? Tumepata the same figure? Francisca, have you gotten the same figure?
No.
What have you gotten?
I'm getting 610,981.
You are getting 610?
981.
981. Rebecca, what figure have you gotten?
I'm still adding.
610,981.
Nancy has gotten 610, 981. Rebecca, just add, we'll wait for you. Abraham, probably you can add again to see if you could have made an error. Ama ulikuwa unatupatia figure ya juu ya another transaction, another nini?
We are adding inclusive of the
Yes, start with a negative 1,050,000. Or if you have done the addition, you can also just subtract 1,050,000.
Okay. I'm getting 3 million.
Yeah?
3,850,000.
No, it can't be 3 million because that 1 million is negative. It's in bracket to indicate it's negative. Abraham, if you get a revised figure, you can still share. I'm still waiting for Abraham and Nancy and Rebecca.
645 273.
645 273. Just a minute. That's a different figure. 6 273. So we have two different figures. We require a tiebreaker. Rebecca, what have you gotten? If you have done. And Abraham, we expect a revised figure from you. So I'm waiting for Rebecca and Abraham. Joyce, you can also re-add so that if you get a different figure.
I'm getting 610.
You're getting 610.
981.
Okay. So that means majority, the three of you are getting 610, 981. That could be the correct figure. So Joyce will confirm your figure you have calculated. Because you are the only one who has got that figure. So we go with that. Now, we want to do for the second period, second project. So let me just copy this table. And paste it here. So now, Rebecca, your gadget is unmuted and there's a background noise.
Okay, sorry.
Okay. So the same table will apply. The PVIF will not change because it's still at 8%. So now what will change is the figure we want to fill in. The cash flow will change. Now I'll pick the cash flow for project Y. So 255 and 125. 255 and 125. Then 210, 460. 210 and 460. Then the last one, 695. 695. So we are multiplying to get the NPV. So the same format, you can give us the answer. For year one is 255,000 times 0.9258. Whoever has the answer, you can share.
Guidelines
236,079.
236,079.
Yes.
Okay. The second year. Okay, Abraham, you are getting a different figure because the three members got the same figure. So probably you need to counter check. You could have indicated a wrong figure. That's why you are getting 287. You could have indicated somewhere a wrong figure. Thank you if you have identified the mistake, Abraham, so we can progress. Year two is 125,000 times 0.8573.
It's
Uh-huh.
107.
107,
162.5.
160.5.
Yes, 162, sorry.
162.5. Okay.
Yes.
So we move on to year three. 210,000 times 0.7938.
166.
What's the answer? Nancy?
Yes.
Yes, give us the answer.
166,698.
698. Joyce, baridi takushika. Hebu give us the answer.
338, 100.
100. The last one? The last one, who is giving us the answer?
$473,017.
473,017. Now add starting with the negative 1,050,000.
I'm getting a different value for that.
For year five,
Yes.
what are you getting?
Did we say that we add 160,000 to the last, or?
No. Okay. Let's go back so that I show you. Now, from this cash flow, the salvage value, we have only been given salvage value for project X, not for project Y. Project Y, we have not been provided the salvage value, so we don't add. Is that clear?
Okay, thank you.
Welcome.
Okay, good.
So, do you get the same figure?
Let me substitute, sorry. Yeah, it's okay.
Okay. So Abraham is also getting the same figure. So who is getting us the total? What's the total?
I've gotten the total as 271,056. 0.56.
0.56.
Yes. Point five.
Anybody 0.5?
Yes.
Anybody who has a contrary answer? Would like to get 3 confirmation of the same answer? Joyce, Abraham, Nancy, Francisca. Other 2 confirmation still pending.
That was my answer.
It's
So Rebecca,
58,587.95.
you are getting 58,000.
587.95.
0.15.
Yes.
Another person. Another
Mine,
person.
like for Francisca, but instead of 0.56, mine is 0.53.
0.53.
Yeah.
So there's a difference of about 3 shillings.
Yes.
So, okay. Another person. Another person. Abraham, what did you get? Abraham getting 349.77. 34,977.5. Wow, we have diverse answers. Can we repeat? Can we repeat the addition? Yeah, let's repeat so that at least we get harmonized figures.
I've used Excel.
You have used Excel.
Yeah.
What have you gotten?
58,587.95.
0.15.
Yeah. 0.95, yes.
Okay, because the decimal we only have here is 0.05. So you should get 0.05. Let's repeat someone else also to add so that we see if we are getting 58,587.5. Abraham is now getting 271,056. 271,056. So we have 2 figures. Which one do we adopt? So, Abraham is saying we adopt the one. First one, 271,056.
I think we can check first what is the total before deducting the investment amount.
Before deducting?
Before deducting the 1,050,000,
Yes.
we can be able to tell where we've maybe.
So can we get then the total? How much was it before you deducted the 1 million?
My total was 1,321,056.5.
321.5.
0.56.
So in that case, if you add it to that 1 million, then you'll get 271. So the answer is 271. So let's go back to the question because we have already calculated the net present value and see what the question or examiner intended us to do. So the examiner is intending us to advise management on which project to select in each of the technique used above. So we have already used net present value. So which project are you advising the management to invest in, considering the answer you have gotten?
Project X.
Project X. The reason?
It has a high positive net present value. It has a higher value than Project Y.
Yes, it has a higher net present value than Project Y. So that's the reason. So once you have done that calculation, you give that particular decision. So let's look at payback periods. Payback period. So payback period, we still use more or less same tables. We'll use more or less same tables. Let's insert. So start with the project Y, X. We start with the project X. We'll only take here the period and cash flow. We take period and cash flow. So I'll copy that and be able to paste on this. So again, because now we are dealing with the payback period, we don't require year zero. We don't require year zero. So what instead we'll have at the end here, we'll create cumulative. I'm also using it's checking cumulative. So for period 1, the cumulative, the total will be still 420,000. For period 2, we get 420,000 plus 380. 420,000 plus 380. What's the answer?
800,000.
800,000. So for year 3, we do 800,000 plus 410. 800,000 plus 410. What's the answer? What's the answer? 1,210,000. Thank you. 1,210,000. Who can remind us the initial investment for this project?
1,050,000.
1,050,000. So when you're calculating the payback period, we are concerned when do we get back our 1,050,000. So we have already surpassed 1,050,000. So what we would say, we require year 1 and year 2 full years. We will not have recovered our 1,050,000. So we have 2 years. That's year 1 and year 2, which will not have recovered our 1,050,000. Then we want to find out a fraction of year 4 or year 3 that will require for us to recover our full amount. So from the total of year 2, which is 800,000, how much money do we need to add? How much money do we need to add for us to get to 1,050,000?
160,000.
No. Okay, we have a total of 800,000. How much money do we need to add to 800,000 to get us to 1,050,000?
250,000.
250,000. We divide that to 50,000 by the money we are going to get in year 3. So how much money are we getting in year 3?
410,000.
410,000. 410,000. So then we multiply by number of months in a year. How many months do you have in 1 year?
12.
12. So do that to 50,000 divided by 410,000 times 12. What's the answer?
7.
So that means we require 2 years, 7 months. So we go to project B, project Y. We've done X. This was the project Y. So we'll add here a table. Add here a table. Do this. So in this table, we'll do away with this year 0. We don't have year 0. Instead, we'll add here cumulative. So for year 1, as usual, 255,000. For year 2, it's 125,000 plus 255,000. Hello, 255,000 plus 125,000 is 380. Thank you. 380. We move on. 380,000 plus 210.
590,000.
590. Sorry, not 590. Move on. 590,000 plus 460. 590 plus 460. Yes, Francisca, you are to tell us.
1,050. 1050,000.
1,050,000. And remember, what was our initial investment?
The same. 1,050,000.
The same. So that means for project Y, we require a whole 1, 2, 3, 4 years. 4 years. Now, as an Neo, what will you advise management to, in which project will you advise management to invest in using the payback period?
Project X.
Yeah, project X. With the reason?
It has a less payback period.
Yes, it has a shorter payback period. So let's look at the next part. Net present value, NP. Sorry. Profitability index. So profitability index. So profitability index, this is what we do. The way we had calculated our net present value, NPV. So for profitability index, let me just change the color for what I want you to add. Sorry. Is it very different? No. So you see the figures I've highlighted from period 1 to period 5. Just add those figures without adding that negative 1,050,000. What's the answer?
I'm getting 1 million. Wait a minute. I'm getting 1,321,056.
1,321,056.5.
And 56.5.
Now, to get the profitability index, I've written already there. The formula is a present value divided by initial investment. So present value I've given us is 1,321,156.5. So we divide by initial investment, which was 1,050,000. What figure do we get?
$1.26.
1.26. Thank you. We'll move on to the second project. I've also highlighted them in color. You add those figures. And somebody had given us already 1,310,000 and 556. Is that okay? The total below before you subtracted 1,050,000 was still that it's okay. So to get the PI, it's equals 1,310,56.5 divided by 1,050,000. What do you get? What did you get? Hello? What did you get? Nancy?
Yes.
What have you gotten?
1.258.
258. Now, considering the two projects, what will you advise management to invest in? 1.258 and you have 1.6. Which project will you advise management to invest in? Anybody who is giving us the advice?
It's project Y.
Yeah, project?
Why? Because it has a higher.
No, it's project X has the higher.
How much is that?
1.26.
And this other one?
And this other one is 1.258.
Oh, then it's supposed to be X.
Yeah, so we'll advise management to invest in project X because it has the higher profitability index. Now, still on the same question, though it was not asked here, let's try to do accounting rate of return. Now, for us to get the accounting rate of return, we'll only need to get this total, this cash flow. Okay, start with this. Yes. The one I've painted green, that's for project X. Get the total. So we want to get accounting rate of return, ARR.
The total is 1,975,000.
1,975,000.
Yes.
So for us to get accounting rate of return, we get average cash flow divided by average investment times 100. So now this amount you have gotten, we divide it by 5 to get average cash flow. So this figure divided by 5. What do you get?
395,000.
395,000. Now, for us to get the average investment, we'll get initial investment plus salvage value. So salvage value for project X, we are given it was 160. So we'll say 1,050,000 plus 160,000, then we divide by 2. Which answer do you get?
$605,000.
605,000. Oh, that's the answer. So now for us to get ARR, sorry. For us to get ARR is equals average cash flow divided by average investment. Then we multiply by 100. So we have already calculated the average cash flow, which is 395. We divide by average investment, which is 6 or 5,000. And then we multiply by 100. What percent do you get? What answer do you get?
65.29%.
0.29%. So we go to the second project. Let's color this. So let's go to the second project. Add these values. Sorry. The mouse I'm using is shaking. This one. Add the total. Add the total. Once you have the total, let me know.
I'm getting 1,745,000.
Yeah, 1,745,000. We divide that by 5 so that we get average cash flow. What do you get if you divide by 5?
349,000.
Thank you. That's equal. You said 349,000.
Yes.
Okay, thank you. So now we want to find the average cash flow. Now, in the event you have not been provided salvage value, then it means that our initial investment will also be equal to our salvage value. Then we divide by 2. So if you have not been provided with the salvage value, that means our initial investment and our salvage value will be same. So it will be 1,050,000 plus 1,050,000 divided by 2. You get the answer is?
It's the same, 1,050,000.
Yeah, it's the same. So now to get the ARR, that will be equals 349 divided by 1,050,000 times 100. What's the answer? What's the answer?
That is 33.24%.
3.24%. So, according to you, which project will you advise management to invest in? According to accounting rate of return, how does X 65.29, Y at 33.24?
Project X.
Yes, you will advise Project X because it has the highest accounting rate of return. I want to request we start next week. We deal with the part C, unless if there's any question or concern that I can address at the moment, because we are really exhausted time. Any question or concern that I can address before we adjourn the class? I know I've not sent you link for some 2 or 3 classes, first 2 or 3 classes. I'll work on it tomorrow, then circulate the link. Anybody with a question or concern pertaining what you have discussed today?
I have a question.
Yes, go ahead.
Concerning the 2 tables, how exactly do you know which table to use? Because I can see both of them are present value interest factors.
No, the one is written present value interest factor annuity. Another one is present value interest factor. Have you seen that?
Oh, yes.
Yeah. Now, when you see present value interest factor annuity, it means you are investing small amount of money, then you expect to be given a lump sum at the end. That's what annuity means. For example, if you invest in a life education insurance, you are taking insurance for your son or daughter. So you are expected to be paying small bits, then you'll get a lump sum at the end of the insurance. So that's when we apply the second table. But now, if you are investing a lot of money today and you are expecting small bits in the near future, in that case, we use the present value interest factor. Is that clear for you, Francisca?
Kindly repeat, I had network issues.
I've said with the present value interest factor annuity, it means that you are investing small bits of money, but expect that at the end of the period, you'll be given a lump sum, colossal amount. And I've given an example. If you invest in insurance company, for example, if you get education cover or life cover for your family, or investment for that matter, you'll be paying installment, monthly installment, but you expect at the end of 5 years or 10 years, or whichever period, you'll get back your money in lump sum. So that if you have such an investment, we apply present value interest factor annuity table. But now, if you are investing money, like now the projects you have been given, they are investing a colossal amount today, that's 1,050,000, but they're expecting to be paid in installments, small installments. So in that case, we use the present value interest factor. So annuity applies when you're investing small bits and get lump sum. Is that clear now?
Yes, thank you.
Okay, welcome. Any other question or concern?
Sir, have we ever had any question regarding that?
Regarding?
Table 2.
Yes, and that's why I've clarified that. In case you have been told the amount of money that was invested, it's small bits and return is high, the application is still same. The interest rate, how you get the PVIF is still same. The only difference is how much are you investing, or when are you investing, and when are you getting back the money. And so if you are investing in bits, then you expect to get a large sum in the end, then you will apply the second table, the PVIFA. Is there another question or concern? Yes?
Okay, then you just judge it using the present value, right? What you get.
Yeah, you judge it. You judge using the investment, the mode of investment. If there's an initial investment of large sum, then you use PVIF. If there's a small bits, then you use PVAFA. Nancy, if you get such a question, now are you able to tackle?
Yes, I can.
Okay. So now what I would request, because now you have the questions with you, you can try at your own time to start looking for response, so that when we meet now next week, we are able to tackle several papers all together. Because this one, I know I had just given you the questions, so you didn't have answers. Some of you are Googling as we continue. That's why you are taking longer. So you can do revision on your own. So when we meet now, it will be easier because you'll have some response almost clear. So I wish you a wonderful evening and a wonderful weekend. Let's meet next week, God willing.
Okay,
Thank
thank
you.
you.
You're welcome.